Warren Buffett, the best way to invest in 2022. Shareholders of Berkshire Hathaway traveled to Omaha, Nebraska over the weekend to listen to corporate officials and the famed investor Warren Buffett, as well as his sidekick Charlie Munger. It was the first in-person gathering held by the conglomerate since 2019, and tens of thousands of shareholders showed up to listen to what the company's chairman and CEO, who is 91 years old, had to say about business, the economy, and investing. Welcome back to Business Opportunities, where today we are here to discuss the ways in which, according to Warren Buffett, are the best for investing. So let's get into the video. But before we begin, make sure you subscribe to our channel and click the bell icon so you don't miss any of our amazing videos. And let's begin. Due to the extensive nature of Berkshire's business, which spans a variety of sectors of the economy like insurance, retailing, manufacturing, energy, and others, the company serves as a useful indicator of the state of the economy today. The corporation is the owner of dozens of different companies, some of which are Geico, Dairy Queen, and BNSF Railway. Additionally, the corporation holds major investments in Apple, Bank of America, Coca-Cola, and American Express. Here are some of the most important takeaways in the next few minutes for investors from the annual meeting of Berkshire Hathaway in 2022, which was dubbed Woodstock for capitalists. First, just ensure that your investment portfolio is robust enough to endure.
Any marker that we'd established we were going to surpass later on, and that continues true to today. I mean, this country's just getting started.
I was reading a Lincoln quote the other day. With public sentiment, nothing can fail. Without it, nothing can succeed. And of course, he was talking about what led to the emancipation.
Some people have criticized Warren Buffett for not being more aggressive in making investments using the wealth that Berkshire has on its balance sheet. Berkshire is recognized for retaining a huge amount of cash on its balance sheet. However, he emphasized the significance of maintaining a sufficient cash reserve to assure the continued viability of the business at all times, particularly in the event of market panics that are analogous to the economic crisis that occurred between 2007 and 2009. Buffett was quoted as saying, "We will always have a lot of cash on hand. If you don't have it the next day, you don't get to play. And there have been a few occasions in history when this has happened, and there will be more times in history when this happens." He continued by saying, "It's like oxygen. It is always there. Nevertheless, if it is absent for even a short period, all will be lost." A similar strategy can be applied to your portfolio as well. You should steer clear of entering positions that could result in a loss that is realized permanently, or utilizing strategies that could be detrimental to you in a time of need, such as margin trading. When life throws you a curveball, being prepared with a cash cushion for unexpected expenses might help you weather the storm. Guys, the next thing is always keep your attention on value rather than trying to time the market. Buffett reminded shareholders that he never knows what the short-term performance of the stock market's going to be, which is why trying to time the market is a terrible investing strategy. Speculators who believe they can enter and exit the market at precisely the appropriate periods have a very low probability of achieving financial success. Buffett was quoted as saying, "We have not been good at the time. We've gotten pretty skilled at determining when the value we're getting for our money is satisfactory." Buffett pointed out that they were too early in deploying capital during the 2008 financial crisis and stated that he completely missed the opportunity in March of 2020. He said that he absolutely missed the opportunity.
I'm buying businesses that own 10 years. What difference does it make what they do this week or next week? I think I know what they're going to do over time. I know I don't know what they're going to do next year.
Can you take us into some of the signs or numbers that are showing you softness specifically?
Just take a look at railroad car loadings. They probably...
When you are making investments for yourself, it is important to make sure that you are concentrating on the value that you're receiving from the investment or how much you are paying in comparison to what the asset will produce, and not on whether you believe the price will go up or down in the short term. Investing in assets that generate income is the way to go that can make you different from other investors. When it comes to deciding where to place their money, investors have a wide variety of options available to them. Once more, Buffett was quite clear about what he values most: assets that generate wealth for their owners. This category encompasses a wide range of assets, such as stocks, bonds, real estate properties, farmland, and many more. Some examples of these types of investments are shown below. Buffett's made it quite plain that he is not a supporter of cryptocurrencies, which have emerged on the trading scene relatively recently and received a lot of interest from traders as well as the media. If you told me that you possessed all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it because I wouldn't know what to do with it, the speaker says. According to Buffett, having ownership of an apartment building generates rental money, and having ownership of farmland generates food. But having ownership of a cryptocurrency such as Bitcoin generates nothing for its owners. That explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got, he added. Want to be a wise investor? Then always refrain from investing in Bitcoin and other virtual currencies. Both Buffett and Munger made it very clear that their perspectives on Bitcoin and other cryptocurrencies have not shifted in the slightest since they first began cautioning investors about the risks associated with investing in them. In 2014, Warren Buffett referred to Bitcoin as a mirage, but during this year's conference, Charlie Munger, who is 98 years old, went much further. In my life, I try to avoid things that are dumb and nasty and make me look awful when compared with somebody else. And Bitcoin does all three, Munger remarked. Bitcoin, according to Munger, is both dumb and evil because it's very likely to go to zero, and it's wicked because it undermines the Federal Reserve and the national currency system. Munger is known for his strong beliefs, and he stated that Bitcoin is stupid because it is extremely likely to go to zero. Lastly, he stated that it makes the United States of America appear awful in comparison to China because the communist nation of China made the right decision to outright outlaw Bitcoin a year ago. When you have your retirement account and your friendly advisor proposes that you put all of your money into Bitcoin, just say no, Munger said. Just don't do it. Steer clear of the risky nature of investing in the stock market. According to Buffett, the stock market has always been a mixture of legitimate investing activity and more casino-like speculation. Nevertheless, over the past few years, the balance has tipped more towards the speculative side. It's a gambling parlor, Buffett told shareholders, adding that Wall Street has contributed to the attitude of a casino. They can't make any money unless people engage in certain activities, and then they make a great deal more money off of people gambling than they do off of people investing. When asked about the current state of affairs, Munger described it as nearly a fever of conjecture. We have customers who know nothing about stocks being advised by stockbrokers who know even less about the subject, the analyst said. It is in your best interest to examine your portfolio and determine whether or not you are more of a gambler or an investor in terms of the activities you engage in. If you're a frequent trader who is always buying and selling positions, there's a possibility that you're putting money in the pockets of someone other than yourself. Investing in an S&P 500 index fund is one investment strategy that has been advocated by Buffett in the past. Doing so will significantly cut the cost that you have to pay for your investments. If you follow these steps, you'll be able to acquire a broad portfolio of American companies while incurring very few expenditures as a result of your investments. Last, but certainly not least, your abilities are not susceptible to lose due to inflation. Shareholders were concerned about their ability to maintain their standard of living as prices continue to rise, particularly because inflation was at its highest level in 40 years. Buffett's been quoted as saying, "The finest thing you can do is to be brilliant at something. Whatever abilities you have are not only unable to be taken away from you, but they also cannot be inflated away from you." According to Buffett, how you are paid or the amount itself may change over time due to the effects of inflation. Nonetheless, if you're the best at what you do, people will always be eager to trade some of what they create in exchange for what you provide. Anything that develops yourself is by far the finest investment, he remarked. The best investment is anything that improves yourself. This video doesn't advise you to invest in any particular thing. It is advisable to conduct thorough research when investing and make sure that you make better investment decisions. We hope you enjoyed the video today. Please do like the video, and for more updates, subscribe to our channel. We appreciate you watching our video today, and we'll look for you in the next one. And have a great day.